Yeah, because within that word reset, I mean, it can mean a lot of things to a lot of different people. Here we're talking about AI technocracy taking some control over this reset. But who, I mean, who is the one who's going to be taking over or deciding what AI is going to decide? Because we already kind of see that in the markets and with JP Morgan and spoofing. I mean, one day it's going to be AI machines that are spoofing, and then who's supposed to go to jail if the machines are the ones spoofing us?
Yeah, well, that's a question I really can't answer. I mean, who programs it, and then of course the supposed self-learning by observation with all the data. All they do is basically find patterns by looking at tons and tons of data. But the basic architecture would come from Silicon Valley for the most part. China, of course, is very good with their social credit system. And so it's, the old adage about a computer garbage in, garbage out. Well, as objective as they can be, isn't all that objective, at least not initially. So there are biases built into the system, even though purportedly they're not. In other words, they're totally objective. But if you started off with some type of bias that maybe you're not even aware of, and that's inherent in the code, the machine might be able to overcome that. I doubt it. I don't believe that machines can really ever think on their own, but there are people that will argue that. And look, I took one computer science course back when we used, cards that we punched. So I'm not qualified to talk about whether or not that really takes place. What I am qualified to say is that I know enough about complex systems that we are on a trajectory, and that isn't necessarily going to hit the target. In fact, I'm pretty convinced we're not going to hit the target. Yet the powers that be trust too much, perhaps, in their ability to see what the artificial intelligence is telling them what to do, how to get there, what's needed, and away we go. I'm going to digress for a second. You might have to help me out here, Patrick. That movie with Johnny Depp, where he became super intelligent in the computer and the dust and all. Do you remember that movie?
No,
I
I,
forget
I
the
don't.
name of it.
I don't.
It was kind of an allegory for what I'm saying, but in that movie, basically it became a moral issue eventually, and that's the moral issue. It's a big part of it, and very few people talk about it. Do you want absolute free will, or do you want your will to be determined as if you're a robot? As Harari has said, I mean, they have the ability to get under your skin and monitor how you're feeling, what you're thinking, what your blood pressure is. If you're not doing well, you should, change this, take more B vitamins or whatever. And that's scary. I mean, in some ways, you could say it's benevolent. In some ways, it would be. But in other ways, when you let another human control another human to that level, you're playing God. And I don't think anyone should play God except God.
Yeah, amen to that. A lot of uncertainties there, and seemingly riding shotgun with all these uncertainties is the downward pressure of precious metals, notably silver. Why do you think the markets or investors have they really have no fear right now, where they seem to have no need for safety or a safe haven?
Well, you're right. I think it's basically education. I mean, most of the investing community now are well below my age, and they've never seen a real big problem. I mean, the 1987 crash was something that, unless you're my age, you really probably don't even know about it. And that was a devastating, one day event that really woke up the investment community. 2008 financial crisis, and that's what we call it, certainly woke up a lot of people, hurt a lot of real estate investors for a while, hurt stock investors for a while. Yet we came out of it by printing our way out of it. I mean, in some instances, we never really recovered, and in other ways, we did. So it's kind of a mixed bag. And generally, the overall trend was, yeah, we recovered. We printed our way out of it and made the problem much, much worse. So now, as we said at the beginning of the interview, there's no way out. At least I don't see a way out. So the next financial crisis from, that took place in 2008, the next one taking place by the end of this year is my guess, start of it, is probably going to be much more of a takedown than what we saw in the 2008 crisis. And I don't think we'll be able to print our way out of it.
David, on February 9th this year, 2022, the Silver Institute had said that the outlook for silver demand is exceptionally promising for this year, with global silver demand forecast to rise to a record high of over 1.1 billion ounces. With those numbers, clearly demand for silver is there, yet spot prices, future prices, they're not reflecting that demand. What's your opinion on why it's not reflecting that demand?
Well, that's the way the market's structured. It's basically a derivative of silver. And as you know, what should take place in a derivative is the underlying asset is king, and that the price is derived from the price of the underlying asset, be it commodity like wheat or corn or gold or whatever. Unfortunately, that's not the way the system really works. The way the system works is there's a number of contracts that are traded every day at the COMEX and the LBMA, and that and these contracts get settled in paper 99% of the time. Very little does the actual underlying asset, silver, actually leave hands. Now, it has been, I know this COMEX being drained, and all that we hear from Wall Street Silver, and a shout out to them. But but the way it works is the physical metal is not being priced on the derivatives market as effectively as it used to. Let me explain. If you go into the retail market, the markup on just like silver rounds is like $4. Well, what's four on 20? A 10% increase is $2. So double that. It's 20%, 25% for retail investors to buy silver in coin form, maybe a little bit less if you're buying it in bar form. These are unheard of premiums, yet they continue to stay at these high levels. They have dropped off somewhat recently, but they're still extremely high relative to the norm. The norm is 7%, maybe 10, depends what you're buying. You're buying a certain product from a government mint, you might have to pay a higher premium, but nothing like the U.S. mint now, like $14 over spot. I mean, that's a lot of recovery you have to see. You have to see the price of silver move up on a U.S. Eagle by $14 to break even on the melt value, because usually a dealer will pay you melt or maybe slightly more. It depends. I know right now many dealers are paying $9 over for U.S. Eagles. And I've had a lot of my members ask me what I would do. I take advantage of it. I'd take that $9 premium and put it in the silver bars. I mean, really, at the end of the day, you want more silver per unit purchase, and you really don't care what's stamped on it, as long as it's 999 fine. People have a hard time with that concept because there's a lot of people that think, well, it's got to be this, or only trust the mint. I mean, the most counterfeited silver product out there is the U.S. Eagle. That's the most counterfeit. It's not, somebody's silver bar, or, some of these smaller mints like the Austrian mint or the Australian mint or whatever. But I just mentioned that. I'm not saying there's a lot of counterfeiting out there. There's not, but there's some.